Welcome back to the Junior Small P channel. It seems to be kind of a holiday. Kids aren't in school. I don't think the post office is delivering today, being President's Day and everything. But there's still some good news, some headlines out there. Not all of it good. And so join us here on the Junior Small P channel as we go over the headlines, discuss it, add your comments below, and as always, we'll generate a lively conversation and exchanging ideas. It's always good, the debates that seem to develop on the comments section below. So, as long as you keep it polite, you're more than welcome to share your opinion and facts. Alright, so we'll just go through the headlines that I picked out today and some of the articles. You guys can go off and Google them, find them if you care to read them more thoroughly than we cover them here. And as always, I will offer a little bit of my 2 cents and opinion on what I think it means. But Richard Russell, is the Fed losing its grip? That's on 321 Gold. Interesting article. Here's one kind of bad news, sad news. Food stamp use among military rises again. And apparently, I got the article here, more military families used food stamps to buy milk, cheese, meat, and bread at military grocers last year. Food stamp redemption at military grocers has been rising steadily since the beginning of the recession in 2008. Nearly $104 million worth of food stamps was redeemed at military commissaries in the fiscal year ended September 30th. That's unfortunate, isn't it? Is India going back to bullion? That's more of an interview. It's on CNBC today, actually. You can go on there and find that headline and then click and there's a video interview. Again, we've covered this before, but there was discussion about India removing the laws that they had put in place to kind of curb the importation of gold. It's not really working. There's a lot of gold being smuggled in, but the Indian people they're consuming a lot of gold all the time, and well, it seems to actually help the country in ways. One of the most interesting headlines today is this one here. Soros doubles a bearish bet on the S&P 500 to the tune of $1.3 billion. I'm sure you're all familiar with who George Soros is. Soros Fund Management has doubled up a bet that the S&P 500 is headed for a fall. Within Friday's 13F filings, news was the revelation that the firm, founded by legendary investor George Soros, increased a put position on the S&P 500 ETF, SPY, by a whopping 154% in the fourth quarter. So, George Soros is betting that the S&P is going to go down. It's headed for a little bit of a dip. We'll see what happens there, see if he's right. The reason we've got the silver today on top of the gold, a little bit of symbolism there for all you little silver guys. I know there's a ton of silver hawks on the channel, but silver's outperforming gold right now. Silver has outperformed gold, and analysts are mixed on the short-term momentum. But I think in the last 2 or 3 trading days alone, silver's up 6%, and it's up 11% for the year. So if you bought silver at the beginning of this year, 2014, you've made a good 14% gains on your initial investment so far. Of course, you have to sell it to realize those gains, etc. But it just goes to show you, I think silver was and still is very undervalued. It's a good buy. It's a good place to be. A lot of you ask me all the time, and I do prefer gold. I like gold just due to its monetization, the central banks holding it. A lot of reasons, historical. But silver is still a great place to put your money. It's a great place to be, especially at these price levels. What is it, 60 to 1 right now for gold? So it's a good place to get in and have some exposure to the metal markets. Gold extends rally above 1,300. That's kind of old news. We all covered that. But investors are boosting their metal holdings. That's a key there. Investors are getting back into it a little bit. So that should tell you something. I think we've discussed this before. The resistance levels that gold and silver hit earlier in the year, they pretty much bottomed out. They bounced off, and they're headed back up again. China could use gold to internationalize the yuan. So again, we've covered that. China's, the 1,000-ton purchase last year. Who knows what they're going to do as far as backing their currency? That there's always speculation about that, but there's rumors that the people in China feel that their currency is overvalued, and what they're doing to kind of protect themselves in that area is buying gold. So not only is the Chinese government and the Chinese central bank, but the Chinese people are buying gold. Okay, the gold price is not following the consensus. We all kind of gathered that here. We've discussed that. The mainstream financial news and media was calling for gold to keep plummeting down to 700. Well, the gold price is not following that consensus at all. It's kind of defying the speculation of your average investing analyst people. Gold technicals. Bullish momentum is not letting up. Of course, we kind of saw that happening. Now that gold touched 1,300, here's what's next. It's an article just pointing to where gold possibly is going to go, but it's one of those articles that the author has some good points. However, as we always say, you never know. You kind of gotta just believe what you do believe. Look at the surroundings, and you can take some advice from some people, but you kind of gotta go with what you're comfortable with. And I am comfortable with gold going higher. I think it's going to, and even if it dipped again, it doesn't bother me. Again, it's a long-term hedge. We're only in the, as some people say, the first inning of a 9-inning game here. We might have a lot of time before us before things unravel. But then again, as Jim Rickards put it, it could be 3 to 5 years. That's his belief, is that within 3 to 5 years we'll see a major rise in metals prices. Now that, gold bullion rises above the 200-day average, near 1320 as the dollar falls. We covered that last week, the last video news briefing. But it's the best run in 2 years on the strong China volume. Okay, now we're going to get to some disturbing news. So if you're still holding out, you're still actually paying attention, here's some news that I think is a little bit disturbing for the economy. Jobless claims in the U.S. increased to 339,000 last week. You might think, oh, it's not that big a deal. But here you go. Foreclosures suddenly jump 57% in California and soar in much of the country. Remember, California is one of the leading housing markets that tips the scale for real estate trends in the United States. So goes California, so goes the rest of the nation, I guess you could say. But let's read that again. Foreclosures are suddenly jumping 57% in California. Okay, now pay attention. Southern California sees the slowest January for home sales in 3 years. What was 3 years ago? Yeah. So it looks as if we might be leaning towards, or the winds, there might be a storm on the horizon. There might be a little bit of dark clouds out there. And it could point to a second dip in the housing market. There's no guarantees. I mean, we have things changing with the Fed. If they stop easing and pumping money into the economy, there's no guarantee. There's no guarantee that tomorrow will be more productive and wealthier than the present or the past. You just can't bet that way right now. Not with the way things are. Here we go. America's disappearing middle-skilled jobs. As we know, the middle class and the middle-skilled jobs are vanishing in a way. But anyways, I guess we could kind of close up with that, and we'll kind of blend it real quick and just kind of go over the biggest, what I think the biggest news items we just covered is that gold and silver are looking pretty strong right now. We got George Soros betting the S&P is going to take a dip. We got some activity going on as usual in China and India with the gold markets, and they're supporting and keeping gold where it's at, and if anything, adding fuel to the fire to increase the value. But the biggest news, I think, is we're going to have to keep an eye on what's going on in the real estate market, the foreclosures in California and the rest of the country, how that spreads, what they're going to do to contain it. It's going to depend a lot on Janet, and her activity at the Fed. Again, if they do anything with interest rates, which I don't think they will, we'll see some probably pretty drastic changes and fluctuations in the markets. But again, who knows? You think they're going to do one thing and then they come out in the news and they do another. But that wraps up today's news. If there's anything else, anything we missed that you guys would like to cover, go ahead and pop a comment below. Send me a private message if you know how to do that in YouTube. And as always, carry on, keep stacking, and I appreciate the comments and your subscription. Thanks. Have a